So I use the power law model as kind of my base case. And I think, and the interesting thing about that model is it kind of shows what the fair market value price ought to be. And then it also shows you what the potential upside is. The bottom line is, I think, I think we're easily in 5 years' time, we're easily at kind of 300, 500, something like that. But if it, you could get a swing where it just goes much, much higher than that. Do you know what I mean? So, in 5 years, I mean, I could easily see it be $500,000. In 10 years, the trend line is 1 million. Now, typically, if you look at it historically, and it doesn't generally stay there for very long. It spikes up, as we all know, and then it corrects. So, but in 20 years, the trend line is 7 million. So, I mean, these are some big numbers, and that's what happens when you compound something out over, year after year. I mean, it is a scarce asset, and there is a large amount of fiat money that's going to move into it as they become aware of how scarce it really is.
Bitcoin is projected to reach between $300,000 and $500,000 within the next 5 years, with expectations of hitting $1 million per coin in 10 years. Looking further ahead, the price could climb to $7 million per coin over the next 2 decades. These bold projections come from Larry Lepard, founder and managing partner of Equity Management Associates, who, along with analysts like Fred Krueger, bases this outlook on the concept of a power law curve. According to this model, Bitcoin's price accelerates exponentially rather than gradually, driven by increasing adoption and rising capital inflows. As more users join the network and more money is allocated to the asset, the price doesn't just rise, it surges. This exponential growth reflects the network effect, where value increases as participation grows, making Bitcoin more attractive over time. However, Lepard believes that even the power law model underestimates Bitcoin's future potential. He argues that once the broader public fully realizes the weakening state of the US dollar and turns to Bitcoin as a store of value, the price could skyrocket far beyond any current projection. In his view, Bitcoin won't just follow the model, it will eventually break through it. Stick around until the end of the video as Larry Lepard explains why he believes Bitcoin will surpass every prediction, even his own.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Look, I mean, Bitcoin, we have Bitcoin prices going back 16 years now, right? And so you can see this curve at which the price of Bitcoin increased from, pennies to where it is today. Because I think what will happen is at some point in time, we will have hyper-Bitcoinization. At some point in time, everyone's going to realize that the dollar is failing and they need to own Bitcoin. And at that point in time, it's going to go up a lot faster and more aggressively than the model predicts. And so the model is going to be broken to the upside. Now, I can't say when that's going to happen. I mean, my estimate and what I'm talking about really is almost kind of the failure of fiat currency. And I do believe it will fail. But I kind of mark that as probably in the 2030 to 2035 timeframe, which is 5 to 10 years away. And it's going to take a lot of policy mistakes to do it, because if they do some things right, they can prevent it from happening. But it's hard to say. I mean, all of us are really guessing. Nobody can really tell you what's going to happen. But as long as adoption continues, and as long, the two things I always viewed as the biggest risk in this is, technically, is it going to keep working? Is there some technical flaw here that I don't understand because it's computer-based, blah, blah, blah. I'm now quite convinced that it's technically going to keep working. And I'll tell you, in 2013, I wasn't convinced of that at all. And in fact, I would sit with core developers. They would tell me they weren't even convinced of it. So, I mean, people who were working on it said, well, it's an experiment, right? So technically, does it keep working? And then does adoption and usage grow? And we're seeing that. I mean, we're seeing, just little things, but steady, Steak and Shake's now taking Bitcoin. We now have an ETF. We've now got the guy who runs the largest asset manager in the world, Larry Fink, saying he believes in it. I mean, it's just slowly but surely more and more people are getting it. And so very much like, a lot of other things and their adoption curves, once we're about to enter, in my view, the steeper part of the curve where it's more and more people are going to adopt it, and that's going to cause the price to go up faster. One of the things that's really beautiful about this as an investment is that it's a mathematical algorithm that just kind of keeps ticking along. It really doesn't depend on a management team. Not entirely true, because you've got core developers around the edges, playing around with stuff. But because everyone's got to vote on changes and we're pretty well down the road, I think the risk of a problem arising with it are pretty low. And I just love the fact that it's got this asymmetry, and yet there's no management team to mess it up. I would just say, don't sell your Bitcoin and get off. If you don't have any Bitcoin, get off of zero. I mean, to me, this is an opportunity that your grandkids will, remember, and don't mess it up. I mean, it's really it's a very unique and rare time that we live in. You're not too late. 109 is not too much to pay. When the coins are 1 million or 5 million, you'll feel like you were a genius that you bought it at 100. So, uh, you know, get your coins, buy whatever you can afford to buy. This is the best performing financial asset in the history of financial assets. Nothing else has ever done this, and so it's very hard. I mean, imagine the early 1900s. You didn't think people could fly. Suddenly, you saw an airplane. You're like, what the hell? I mean, it's the same kind of thing. It's something really unique and different. Let me explain why. So every commodity in the world is responsive to price. Okay. In other words, the price of gold doubles, we'll mine more gold. The price of oil goes up, we'll drill more oil. The price of corn goes up, we'll plant more corn. You can and the supply will bring the price back down. Remember, here we got a commodity, all Bitcoins are interchangeable, where the supply is fixed. So if the price goes up, we don't get any more of it. The price just goes up. So, that's what makes it so incredibly unique. And I think so hard for many, many people and TradFi people to get their head around. Do you know what I mean? And that's why those of us who really understand it deeply, just are pounding the table that you've got to buy some of this because it's going to be so much higher and you're going to have enormous regret. I mean, if you're looking at it 109,000 right now, and in 5 or 10 years it's at 2 million and you knew about it, but you didn't buy it, you're going to experience regret. Now, I'm not saying you got to take your entire net worth and buy it. No, 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 no. You got to, I always just try and say, get off of zero. Take a 1% allocation, take a 5% allocation, and then forget about it. That's the other great thing about it, compared to companies where you got to read the reports and listen to management talk about it. You can buy this stuff, forget about it, go live your life. You wake up in 5 years, you're going to be richer.
Lepard believes Bitcoin's future trajectory will outpace any existing predictive model. While he acknowledges that Bitcoin generally follows a power law curve, where price increases exponentially with growing adoption and capital inflows, he anticipates a point where this pattern breaks. As trust in fiat currencies erodes, he foresees a dramatic surge in demand that will drive Bitcoin's price upward far more aggressively than any model currently predicts. According to Lepard, this explosive shift could occur sometime between 2030 and 2035, depending on how governments respond to mounting monetary instability. He envisions a tipping point where a mass awakening to fiat's decline triggers a rush into Bitcoin, accelerating its rise beyond historical norms. In the meantime, Lepard strongly advises individuals to get off zero, to own at least some Bitcoin before that inflection point arrives. Now, let's return to Larry Lepard as he explains why Bitcoin's price is climbing in today's market environment.
We're in the final phase of this bull run. Let me guide you. We've launched Daily Dose Crypto Alpha, a free private Telegram group just for the Daily Dose Crypto family. Inside, I'll guide you through profit-taking strategies, real trading tactics, long-term crypto investing mindset. Only 500 spaces available, then it's closed. If you're serious about this bull run, click the private link to join now.
Why is Bitcoin going up now?
Well, a lot of reasons. I mean, the biggest picture, I think, is just continual monetary debasement. That's kind of, the book describes this as kind of just baked in the cake. This is Lynn's model, and it's been my model as well, that when you're expanding debt and you're expanding the monetary base more quickly than you're expanding GDP, that's an inflationary thing. And, Bitcoin is fixed algorithmically to 21 million coins, so it will not expand as all these other monetary base expand. So in dollar terms, Bitcoin, I'm with Saylor, Bitcoin is going much, much higher. It's going to multiple millions of dollars per coin over, the next 10 to 15 years. So I'd say but to point to the biggest cause is because the fiat system and the Keynesian model really just kind of requires continued inflation. And there was a time when that was, calmer and people weren't paying attention to it, like the 80s. After we had the gold rush in the 70s, and then Volcker got things under control, and most people weren't paying attention to sound money during the 80s, but it's gotten steadily worse, this issue of government spending and debt. And I think now we're kind of at the point where the pot is really on the boil. It's happening very quickly now, and as we all know, we hit a record high price today at 109, and I see us going to 140 or 150 this year pretty easily, and potentially higher. But I'm very comfortable predicting that. I think the trade wars actually kind of feed into all of this. I think all of the economic problems that are bubbling up all over the place, including the Japan bond market, which appears to be kind of in a state of falling apart, I think all of these feed Bitcoin. The Bitcoin the price used to be correlated with the S&P, or I'm sorry, with the triple Qs and the Nasdaq, because it was kind of viewed as a risk-on asset. I think we're in the process of seeing that change. I think it's now starting to trade more like digital gold. And what's going on is these two assets are really beginning to realize that the government is in a trap, that they just cannot stop printing money to keep the system running. And once that becomes widely known and understood, we'll have kind of what I call and describe in the book as a mass scale Gresham's Law-like event where people want to get out of other assets, particularly bonds, that are denominated in a fiat currency and get into the two currencies that the government can't print, which are gold and Bitcoin. And I prefer Bitcoin to gold because it's got an adoption cycle and it's got so many advantages over gold. But I don't shit on gold. Gold's got merit. It got us all the way to 2008, and it's not going to disappear overnight. It'll still do a job of protecting some of your purchasing power, but Bitcoin's a much better choice.
For the folks at home, what is Gresham's Law?
Oh, sure. So Gresham's Law, Sir Thomas Gresham was a guy who was an advisor to Queen Elizabeth back in the 1500s. And what he said is, and so the issue of monetary debasement, this isn't new, right? This has been around for thousands of years. People have cheated on the money. The Romans clipped coins and sovereigns clipped coins, and everybody, the denarius, which is the Roman form of coin, was started off all silver. By the end, it was all iron. And Gresham's Law says that people can figure out when the money is going bad, i.e. if that kind of debasement is taking place, the average human being will look at the money that they know is losing value, in other words, where prices are going up in that money, and say, and then they'll look at another form of money maybe that's not losing value, let's say an ounce of gold, and the price of something in an ounce of gold won't be moving at all, and they'll say, I get it. This one form of money is losing value, this other form of money is holding value. I'm going to spend the one that's losing value, because why wait around for it to lose more value? And I'm going to hold on to the one that holds its value, which is gold. And so the law itself is written down as good money drives, or bad money drives out good. And what that means is that if the money is going, if one form, and there are always a couple forms of money going around in any economy, if one form of money is going bad, i.e. being debased, that will cause people to hoard the good money and spend the bad money. So, and at the extreme, like in Weimar Germany in 1921 through 23, they literally, throw out, the bad money and use wheelbarrows with which, because the printing presses were running so hot, to purchase things, and they hang on to the good money, which in that time was gold or the dollar or the British pound.
That was Larry Lepard sharing his latest market outlook, and his message is clear. The growing surge into hard assets like Bitcoin and gold isn't about chasing short-term gains, but reacting to a system showing signs of deeper instability. Investors are shifting their strategies not because of temporary volatility, but because the underlying structure of the current financial system appears increasingly fragile. Warning signs are flashing across the bond market, commodities are gaining momentum, and long-duration debt is beginning to crack under pressure. Lepard suggests we may be entering a new era, one where the old monetary playbook no longer works, and central banks may be powerless to stop what's coming. The move into hard assets is a signal that confidence in fiat and traditional financial tools is fading fast. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.